Hey everyone, welcome to your daily update for SOL and BTC. Just looking at the one-day liquidity, Bitcoin definitely looks like it could go up and hit that 117 area. There is a lot of rejection structure there, which could be used if they want to make a bit of a dip. And certainly it's basically evened out. Like you'd think after masses of liquidations, people would be very, very bullish and of the price basically only going up, up, up. But it appears that just as many people are shorting it as longing it. So mostly it's just gone very bullish, and whether that's just this constant narrative about ETF, 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 but there is a weekly hold level sitting at 210.6, and there is some weird stuff that just happened this morning on the BitGet exchange where there was basically like a 1 second or sort of spike, and it just went straight into that level and rejected, which and then it actually did like a 1 second candle all the way down to 200. So we've seen that kind of weird stuff before happen on Coinbase, and then what ended up happening was all the other exchanges and all the prices and etc followed that path over sort of a more normal time period afterwards. So yeah, I'd just be watching that 210 level. That one-day liquidity lines up with it, and there isn't really a lot past that, but there is a heck of a lot to the downside. We're also confirming some new really high time frame support today, once again at that 189 level. So, we could close something like the 143 day, go up, hit the weekly, dip down to the high time frame support, take out all these people that are chasing the longs, and then we could bounce up from there. So we're never out of the woods when it comes to this. I was just talking to someone in DMs earlier, and the actual the 11-week rejection that took us back to the trend from 253, the actual bottom of the 11-week range is like 120s. So you can kind of imagine that in the bigger scheme of things, at any time the price could be traveling to break the top of the range, which is 253, or it could be traveling to retest or break the bottom of the range, which is 120. And all it really takes is incentive and appropriate narrative for somebody to be able to attach to. And I probably harp on about this a lot, but there's, if you look at things like X, there's thousands of influencers who are trying to give you a reason for why things happened, and they'll all bag out the people who are saying, hey, look, the charts were looking bad, there's TA, there's all this kind of stuff. It's all what is it, astrology for geeks. And then you'll have the other people who just go, nah, narrative just exists because people go looking for it. And I think you'll probably find the middle is actually real, and that's that people with the power to move the market are not going to do it unless there is something for you to find. So, when there is smoke, that's when they decide to light the fire. And because you will then look at that smoke and you'll look at the fire and you'll go, okay, I accept what I just saw. But, going through some of these really high time frames in the last few days, I've been digging really deep into some of the stuff, and it's just nuts. Like if we had known 4 weeks or so ago the actual target for that 253 rejection on the highest time frame that it existed on was actually going to take price down to levels of 170 to 140, you would have probably made very different choices about whether you were longing up there or not. And looking at it from a one-day perspective, it just kind of looks like the one-day structure just got blown out of the water. But you zoom out, and all it's actually saying is, hey, that's just a normal trade. So it's kind of scary. Everyone attaches it to whatever's come up since and whatever smoke was in the market beforehand. But yeah, if you were deaf, dumb, and blind to every bit of social media, and you were just purely completely able to look at every single time frame of the charts, yeah, you could have seen that coming. So now we look at the daily and we go, well, hold on, we've got liquidity heavily stacked to the downside. We've got a weekly rejection at 210. Should we ignore that? Probably not. We've got a lot of reason to go up maybe to the 117.5 area. We know 117.5 is a support area for high time frame. We talked about it when the price was coming down, that those were particular levels that if they started to close below, they could use them to cascade. And so now, if we go back up and we test that from the other side, the question is, are we then going to reject? And does that then allow them to dip down and take some of this liquidity to the downside? So that's kind of what the 1 day is showing. If we look at the 7-day, 7-day BTC is really sort of stacked to the upside. Good incentive to go up there. SOL, there's definitely some to the upside, but as you can see, still, the bulk is just people getting in super bullish, basically. And then 30-day, you could more or less flush the market in both directions again, and it honestly wouldn't surprise me if they do it. It's just markets are just so full of greed. And when everyone talks about like you buy when it's in fear, and that's true. When the bulk of the market is in fear, you should be looking for longs. When the bulk of the market is in greed, you should be taking profits and looking for shorts. But that's just because the big players are actually working the other way. When the price is in greed, they're looking to push everything down and buy your leverage. And basically, when the market is in fear, they're looking to push it up and take the shorts. So I suppose you can look at two different directions. But looking at the 30-day leverage, that 107 area, 108 area, still definitely on the cards for BTC, but they could also take it and push it all the way up to the 120s. So, and I think really the most common top of range for BTC at the moment is about 124.5, and that isn't necessarily going to be a straight line. I mean, it could be, just given that there has been billions of dollars siphoned out of the market into different traders. It hasn't left the market, but it's gone from one trader to the other, sort of thing. So now, if they decide to push the price up and then sell whatever they've bought, maybe they do push it up quite rapidly. But the liquidity doesn't really show that. It sort of shows that there might be more of a sort of ranging type move to the upside on BTC, and that would also be quite in line. Although I guess we're sort of getting a bit late in the game to say that the 4-year cycle is still real. We might be. I was watching an interesting video yesterday that talked about how they've pushed out debt renewal on money markets and things like that, and maybe 4-year cycle could be justified to become a 6-year cycle. And so there's a lot of people starting to talk about that. There was some interesting basis behind it to do with ISM and all that kind of thing, and definitely worth thinking about. But until it really starts to change, until we see prices close back over the 120s and then over the 124s and properly close them, not just push through them, you might as well just say it hasn't changed yet. Okay, so let's have a look at these charts. Actually, let's look at this just quickly from that other direction. Okay, so you can see BTC has plenty of stacked liquidity to push into that 117.5 area. And it is slowly bridging the gap to get to the next level. So it could definitely go up. As you can see, there's also a lot of people who have been chasing it. And so, going down to the 112 area would also be just as easy as pushing up. SOL's a very interesting one because it's more or less moving. And I don't know whether this is just a BitGet glitch, but this is what I mean by there was some strange stuff that happened this morning. And this yellow line that I've placed up here is it is the 1 week hold, and you can see this candle just perfectly wicked up to it, tapped it, went down. I had a short sitting on that, and it entered. And as the price came down, I didn't get this exit down here to 200. But as the price came back down, I just looked at it and went, nah, there's just something really wrong here. So I closed at about 204. Yeah, and then it did that, which, or actually I think I closed just after that. I closed about here, about 204. And the target for that short was 194. And that would sort of, see this trend you've got coming through down here. So the fib level for the 1 week rejection and the trend that's actually running through here, which I've just sort of put on this chart for the sake of confluence, they line up. So I am sort of wondering whether or not this was kind of the algo's going a bit crazy, sort of exposed their hand. Now all the other exchanges, etc., are probably moving up to that same level. When we hit that level, we might then actually come back down to take this bottom liquidity. But yeah, looking at it from the BitGet chart at the moment, it just kind of looks like it's traveling in an area of zero liquidity, which is very strange. But looking at it at the high time frame, you can see that it was, the intention was to take that liquidity, and now does it come back down to, you know, test these trends, which is that rejection. Okay, so let's have a look at these charts. Okay, let's go and have a look at SOLBTC Strength. So SOLBTC Strength on the daily is in a position to close up over the interior trend. It's no guarantee that that means it's going to then break the trend, because as you can see, it's been there, done that before, been over the top and then had a rejection. It is sitting just underneath a break level, and more importantly, it's sitting just underneath a origin level. So if it pushes back up into that area, just above that 181.63 level before the end of the day, then that would be very bullish, and it would come back up to try and target wherever that next origin level actually is, which is somewhere. Sorry about that, should have had that prepared. There it is. So it's back in the twos. So yeah, 20462 would sort of be the target if that climbs back up inside that range. Okay, let's have a look at this. Let's have a look at these BTC safety assets. So they're kind of where you want them to be. They're back underneath the trend, and sorry, they're back underneath the break level. They're back underneath the origin level, and they're just touching on the trend support. So the next candle can open and it can be under non-hard closed origin level, so that's still resistance, a break level, which is kind of resistance because it isn't hard closed. Then it could be on the wrong side of the support trend. That can reject it down. It hasn't hard closed the range trend, but it hasn't tested. Oh, yes, it has actually. Where's that coming from? Oh, yeah, and then it has tested that a couple of times. Another range trend. So what's going to stop it? So 64.91 being the origin level, or the untested origin level at 64.71. So yeah, you could actually get another period. I don't know whether it would do all this in one day, or whether it might play out over several days, but you could get some more downside to the safety assets, which means more upside to your risk assets based on that structure. Let's have a look at the totals. Okay. So totals are creeping back up inside a, whoopsie, wrong tool. What are these up to? Okay, so they're creeping back up inside the origin level there at 159. They're in a position where the next candle could break the trend. They're getting back up inside a hard closed range of 1.57. and they're hard closing back inside the range of 1.53. What else are they doing? And also hard closing back inside the origin level of 1.53, as well as 1.52. So this is pretty bullish. There could be a dip down to any of those previously mentioned levels just to retest the bottom of the ranges that are now being hard closed. But if it does and then it bounces, then it's going to continue up really to probably look at something like the range trends that are sitting up here at 1.66s. We've got just another, that's just a break level there at 1.63. Then we run into the resistance interior trend at 1.68. The thing is, it's bounced off so many origin levels at the bottom. The logical target for this is actually to come up and try to hit this 1.7 area again, followed by potentially that 1.72. So that's not looking bad. It's sort of the middle of the range as far as what it's creating. And I guess at the end of the day, it still could go back and retest the bottom because it's kind of at the 50% now. There's nothing too bad in there. We're not shifting the trend to the top side. Yes, it's not so bad. Okay, it's the weekly, which still has 6 days to go. The bottom of the weekly range was effectively that origin level there at 1.51. The fact that it even closed back up inside that is bullish anyway. If the daily was to have a bit more of a pullback or a flush, it could just mean coming back down here to test the trend or the base of that origin again on the weekly and then move up from there. It's all kind of confluent. Could it just keep going up? Definitely. Could you get a dip back in the overall risk market of altcoins back to that sort of 1.51 level? Definitely. And should you consider taking, what level is that actually? Yeah, and should you consider taking some profits even at these levels that it's at now? Yeah, if you're in really good profits, it's not such a bad idea, because this level that's running from back here, from December of 24, it's not a hard close level, and it has rejected off that. So it's not the first time it's had to sort of have a fight with it, but it is the first time it's had such a precise looking rejection like it's having now. So if you are in really good profits, it's not such a bad idea to be taking something around here, and you could just take a bit of a punt that maybe the price comes back to the trend in the 1.5s, 1.5s through to possibly the fib level here at 1.49, just as a rejection of this hold. So yeah, it could go up a bit longer, but that level is still technically going to be the top of the weekly overall market cap range until you can get a weekly close, hard close that is over the top of it. So and you can't get a hard close for at least 2 weeks based on that current structure, because this candle is from below it. It would have to be the next one that would have to actually close an accumulation above it. So that level could still technically reject, and yeah, your worst case rejection, most of this stuff's been retested now. Basically everything down there's been retested, so I don't think it would be a huge rejection. It would probably be a test of the break level, gone back up. They could come back to that 1.38 level, because that will become high time frame support. And it's also approximately, so if you look at these various different ranges, this range is sort of from here to here, and we're at the 50%. The bigger range is actually potentially this in 6 days' time. So yeah, they could start heading back towards here at some point, but really that's more of a thing to be confirmed in the next 6 days. Okay, what else we got on here? Versus the DXY, it's looking good. Looks like it might actually close back up inside the old range trend. So that's what we spoke about yesterday. That's what we want to see today. 2 hours, creep up a little bit, get up inside that range trend, keep pushing up. Next level up there at 373. And over the top of the downtrend, back up inside the range. If it stays up like this for 2 hours, it'll hard close up inside there. It'll move the trend. You don't want a wick on this thing. Like you want it to at least stay at that market cap or higher, because then it gets rid of that wick and the new candle can open on the other side of the trend. And then all you need to just keep price going up is you need to have candles that close where they can open up on, open up with a free clearance of the new trend as the trend moves, and then the price can keep moving up. But I'd be very cautious of that 3.79 level there, or even the reverse of this range trend here. And if this is just purely manipulation of algos to keep keep the market pumping, it'll open on the other side of this trend. It'll go up. It'll probably stuff around with the reverse of this around that 376. But then ultimately what it will end up doing is creeping over it, potentially closing between these two levels. Then it will use the reverse of this to break this, and then that will allow it to get back up into the next range, and so on. That's kind of how a whale would manipulate an algo, because wherever it closes, the algo will make a decision as to whether it longs or shorts, or buys or sells. So closing just over the top of a range, it's going to go cool, range has been recovered. We're now at the bottom of the recovered range, we should buy, so therefore it'll go up. If it closes underneath, it'll go, oh, we're at the top of a range, it's now better risk to sell, so then it's going to sell. So that's kind of how people with a certain amount of money can manipulate all the little bots out there. So that's looks like they're trying to push it into the upwards direction. Okay, let's have a look at BTC. So BTC on the daily has recovered the previous broken trend, which is that little dotted line through there. Assuming it closes like this, it'll shift the interior, very much mimicking the totals, but with a little bit more strength. So you can see the exact sort of trend line. If you put it on the totals are slightly down below, but still in an okay position to break to the upside. When you look at it on BTC, it's quite clearly going to be able to open on the upside if it stays around these prices. So all that sort of says is that BTC is still displaying more strength than the overall market, but overall looking okay. As far as next sort of resistance levels, it's definitely going to be this area coming through here. So you've got 1169 through to 1175. They are, basically the polarized point of the entire range. So if you're up there to down here, that's the middle part right there. And everything through there is basically a series of origin levels. They're either ones that were created to keep price down, or they were ones that supported price until they got broken, and then they became ones to keep the price down. But this kind of absolute dive through all of that is not the kind of thing you see terribly often. I used to always say price never moves in a straight line, but I think I've just been proven that I'm wrong. Maybe on the really odd occasion, price can move in a straight line. So it looks like, if you're in profits and then you start to move into these 116 levels and 117 levels, there is a very high chance of rejection from those levels. So, I'd just be keeping an eye on that. It's also basically where you intersect the interior downtrend. So, yeah, you can always, take profit at these types of levels and then just add it back in if the candle starts to close above it. Or take partials. You don't have to take everything off, but like I looking at everything that's happened in the last week and looking at the overall structure of most of these charts, the only thing that says that we're in a bear market is the cycle theory. But yeah, even that, there's just too many signs that are saying that there's probably going to be one more little push. So, and if in fact the extension of the debt markets and all of that stuff that basically flows onto the business cycle and all that kind of thing, if all of that really actually does make any difference, then yes, the cycle could go longer. I don't know about super cycle or forever cycle or some of that BS. Like, price just really should never go up forever, because the whole point of major players is to compound and to buy stops and basically buy at a discount and sell at a premium. So but yeah, everything they bought down here, for them to be selling, well, actually the wick went down much lower, didn't it? Everything down here, if they actually want to sell whatever they bought down here at a premium, it means going above here. And even just some of the simplest TAs, like this little thing here, well, let's just roughly draw that. Maybe that's a bit bullish. Let's go a bit lower. Okay, but what have we got running through here? We've got the range trend that basically was the high on every one of these on the daily. And if you were buying at a discount and selling at an equal premium, which is probably more so over about here, which is still October, if it gets there by then, all that sort of says to me is that, yeah, they probably are going to go to the 130s conservatively, just based on that. So watch this space. See what happens. Okay, let's have a look at it on 2-day. So 2-day is just on the fence of getting back up inside the support trend. So they may just push that up just a little bit before the end of the day. Also, every candle that's been below that trend, so that's here, that was before the dump, that's here. Every candle is not hard closed below that trend, so it is not a lost trend. It's had a deviation, it's had a epic deviation, and that took it down to the bottom of the range, which was the origin level at the bottom of the 2-day range. And the next origin level that's basically sitting there untested is 124539. So it's probably going to get up inside this range, whether it's today or whether it's in the next 2 days, and then it's probably going to bounce the trend. Likely it will just go straight through this hold level because it's only a single candle under the hold level. This is only a single candle under the hold level and it's tested. And then in, what time's that? 14th, 16th. And then by about the 18th of October, you have a crossover of the interior range trend and the top origin level. If it then closes over the top of those things at the same time, it's going to be, wow, yeah. You got the reverse trend. Let's just start with that, which is hard closed by this candle. So 18th of October, reverse trend is where? 128. If it works through it slightly, doesn't take much for it to get into the 130s. If it recovers it, that's very bullish. That's then the 140s. So how greedy are these people? Where do they want to go? That's looking like a pretty good case to be bullish on Bitcoin, assuming it just keeps doing what it's doing, which is creeping up, sneaking into levels, getting over them, moving up, getting over the structure, creeping up, just keeps doing it. Okay. 11-day. So 11-day has a choice today. It either chooses to create a hold level here at 115,191, or it doesn't. So again, you can kind of tell bullish intent. So if they were to create this hold level, maybe they want to do a flush back to the trend. That could get you to that 109 area, take out all these people that are overly bullish and have started longing too early, thinking that, you know, this is the generational wealth opportunity, etc., etc., etc. So yeah, maybe they do that, but it doesn't take away what's happening on those other timeframes as far as potentially it just creeping its way up. It just means that it might dive down a bit and then go back up, because it can do that over those several days. So yeah, I'll be looking to see whether or not that closes below there. This basically has 11 days to get back to that 120.826 level. And if it does creep over that in the next 11 days and close this candle, it'll have a hold level, it'll be above the trend, it'll basically be in a position to, you know, have a breakout. So let's have a look at 13-day. So now 13-day, it's kind of on the support trend. It could push up and create a bullish hold level if it closes over that 116,395. It could stay where it is now, which is really just a nothing close. It does break the interior downtrend, which is this red line coming through here. That flips up to the top there. That does imply then some more resistance coming in around the 126s. And if it was to go and retest the hard closed broken trend, it's up there in the 140s. So that's still, it's not a train wreck. You can see how quickly they can change structure in a matter of a day. You know, 22-day, looks like it's going to open in a pause me location, unfortunately. So it may open below the trend. This is what they did with, I think it was the 3-day yesterday, which is why we've just been sitting here in this tight little range. But it may open just below the topside trend and just above the range trend. So you might see it just a bit more sideways in there before it breaks one way or the other. But it's still above the support trend. It hasn't even touched the base of its range, not that you want it to, because that's 74,000 or something. But and basically it then has that same level in the 120s, which is 120.826. It has 22 days to get back over the top of that, and then it could bounce. So getting more support forming. Okay, what else we got? Okay, so the 26 days, I don't really like the 26-day. It could close up, but it would have to get over that 116,900. And you almost don't want it to do that, because it would introduce a new range trend for rejection here, which then means you'd probably have a rejection from 127 back to whatever the created hold level is, if it creates that hold level at 116. So that's kind of like a push up and then a back to tears, back down again. Also, this time frame has not hard closed these lower levels. So if it does close up today, it could trigger a retest back to either of, what do we got? 18350 or 106,421. So yeah, you could get a triggered retest if that closes up today. So yeah, that's probably the warning sign one to watch, see if it closes up or down. And what's he doing? Distribution resistance. Oh, we just ran into some distribution resistance on SOL. Okay, and if it was to close down, the next candle basically has 26 days of do whatever you want. Doesn't matter till it closes. And that's almost more what you want to see, because then it has the chance to get up above these resistance levels, retest the backside of the broken trend, and if it can then hold those levels, it can go higher. So see how that goes. Week is, the weekly close we know was good. It got back up inside the weekly levels. It didn't create a weekly hold level. This is where it differs quite a bit from SOL. SOL actually did create a weekly hold level, which just really makes me wonder if they're just going to get everybody bullish on these ETFs and then flush it again, because Bitcoin didn't create the weekly hold level, and that sort of, when you compare the two weeklies, where is it? See, you compare the two weeklies, SOL's going to run into resistance, and yes, it has support, so yeah, okay. It doesn't necessarily have to be a big flush, but BTC didn't create the resistance, so something's up. Okay, right, let's have a look at SOL. Okay, so closing up inside that 196.662 origin level, and on the correct side of the trend to bounce. Yesterday that created that move, which was the origin to origin. So now this has played out on BitGet. It has not technically played out, I don't think, on other exchanges yet. And that was that weird stuff that we spoke about during the liquidity today. And that origin level that it's just hit, that is the weekly hold as well. So yeah, now it's a case of, does it climb back over? Because a daily origin is effectively the equivalent strength of a weekly hold. So if it gets over the top of this thing and it closes, it could actually reverse the single candle weekly hold. So really it's a case of, let's see if we actually close over 210.045 for the end of the day. And if we do, you may still get a wick down for liquidity, like what you see happened here after the close. But at the same time, you're more likely, I won't use the word guaranteed, but you're more likely to get another move up, from the next candle over that 24 hours. And we still haven't hit the resistance trend yet, so we've still got that to play with. And the next, let's make sure I've got this right, but I think the next, yep, it's not one. That's not one. That. Nope. Yep. And so the next daily origin resistance level is that there at 236.977. It would have to get through all the trends. It would have to break the break. It would have to get back inside that little range there. It would have to get back inside that range. There's actually a lot of stuff that kind of really gets in the way of that, but that is the target. So effectively, if it can get back up into that 210 range above that origin, and if it bounces off it like the bounce you see down here, then it's going to try and get through all of that. So, and meanwhile, people will be screaming ETFs and blah, 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 but whatever. It's lines on a chart. Okay, so let's have a look at the 2-day. So the 2-day's not lost its range at all. It's back up inside the support trends. Resistance trends starting at about 220s. It's a whopper of a range trend coming through here at about 215, 216. Single hold level there. Wouldn't be too worried about that. and see if there's any. Yeah, and it's closing back up inside some of these older origin levels, like this one here at 196.184. Or is that 199? What is that? No, oh, hey. Yeah, 196.184. Yeah, this is very bullish structure. Very bullish structure. It's pretty much just says that it's just done this huge sweep, grabbed a little liquidity, and now they're going to travel up until they hit some premium price to sell. Now there is a really troublesome level right here, which is probably the one everyone should be very aware of, and that's that it's this 264.5 level. So it is, I think, yeah, I think on some of the higher time frames, this hasn't been touched yet. So I'm not saying it's a level like the 11-week level that just literally sent the price to zero on some exchanges, but it's still a level that is structurally the same but on a lower time frame. As for where it could send price, well, it would, if it moves at it too quickly and hits it too quickly with the trends being too far away, then it would almost be like a complete round trip to where we are now. If it works its way systematically and slowly to it, then it could be a less of a dump. But just keep in mind 264.5, it is a level that's heavily polarized, and it's either going to create a breakout. You can see what it did there. You know, I think what it took price from, oh, sorry, it's up there. Took price from 264 down to 98. So I wouldn't necessarily expect that kind of dump off it, but at the same time, you know, even if it dumped to half of that, it would bring it back to where it is now. So just, yep, keep that level in mind. Okay. And you've also got, on the 11-day, you've got 259, but 259's already had its first rejection, so I wouldn't, if it does reject again, it's probably not going to be the same. 243's had its first rejection. This is back up inside the support, but it's under the trend, so it could reject from 220's. You know, these aren't necessarily big rejections. Some of these, like if it rejects from 220's, it might just be back to, you know, 210's, 208's. You know, yeah, it could go further, but I think it's, what is it doing today? Yeah, look at that. Perfect hit of that hold level. Ouch. Okay. It's 13-day. So 13-day might be a little problematic at 244. So we've got a break level, we've hit it, we're closing below without retracing back to it. And the other level here that could be problematic is that 216 level again. So that's really old. We've never hard closed a 13-day candle above it. It's still technically resistance. And it's had some pretty good swipes at trying to get out of that area, but it's still technically resistance. Yeah, so 216 and 244. And there's our 253 level showing up again, but it's had that rejection. And then that's a pretty good example of why that level could be problematic. So it's appearing here also on the 13-day, but on the 13-day it's appearing as a much bigger downside, much bigger failure to get back to it, and it's not had its first retest after converting to a higher time frame resistance. So pretty much any of these levels, like if you're in really good profits, it's not such a bad idea to be taking just something off the table as this starts to work its way up, because this is showing 216, 244. I don't know if I'd be too worried about 253 a second time, and then 264. They're all pretty reasonable rejection levels to try and stop that price from going to all-time highs. 22-day, not too much. That's all been tested. I mean, there's slightly bullish intent showing here, because it looks like it's not creating these hold levels. So if it closes over 202, then it's making a choice not to create a downside hold level. And the bounce of that trend there is basically exact. And that's not where the trend is anchored. The trend is anchored back here on this candle from March. So, it's come back. It's rejected the high time frame resistance. It's come back. It's found trend support. It also basically did it where the prior downtrend crosses over perfectly with the actual uptrend. So you could have almost timed the day on that. And yeah, the choice to close here and not create a hold level is actually good, because typically the way a range gets created is high time frame resistance reverses the price. A hold level gets created. The hold level then continues to ladder the price, and that becomes a downtrend. But in this instance, this is the hold level in here, which is that in the 150s. 150 is laddering the price. 202 has not created a hold level. So that looks like it wants to keep going up, but I would not put it past rejections from these levels up above. So 26-day, if it was to just push up just a little bit more, we'll be on the top side of the trend, so that's positive. Like the prior time frame we just talked about, it's not creating a hold level unless it goes under 201, and it's still above the interior support trend. So yeah, it's not so bad. Okay, what else we got? Every rejection on that time frame appears to be done. Okay. Yeah, and then just the weekly. So once all the other exchanges catch up, probably need to get a chart from some of the other exchanges. You may get that flush off this hold level, just a quick flush. I mean, hell, it might go bigger, but the moral of the story is just keep an eye on short-term price action once we sort of hit that 210 blanketly across exchanges. Okay, and a quick look at Tesla. So I just posted this in the Discord earlier. So that 421 level that we spoke about yesterday, that was the origin support level for the range. I'm trying to see where the daily is for that. So yeah, this is the tricky thing about stocks, I guess. The candle that we were looking at, which is this candle here, it was below it, but because of things like pre-market and all that kind of stuff, the price opened back above it. So because it opened back above it, it's bounced off it and it's pushing up. It's going to most likely, where's it going? Can't wait for the stuff to be 24/7. It's most likely looking to close above that range trend, if it can, or just close back into this range. So yeah, if it closes above that 435.9 level and stays above there for the next open with all the post-market, pre-market stuff, yeah, if it can stay up inside there, then it should be able to basically reclaim that range and look to move up. But this level could give it a hiding. So 465 on the daily. If it gets back to 465, then that, hitting that would potentially reject all the way back to trend. So yeah, like I say, I don't really trade stocks, and partly that is because it is just too hard to find the exact levels if you want to do leverage trading. But if you had a really big just bag of this, and you were looking at trying to do a bit of swing trading on the daily or something like that, then you'd probably look at these levels like 465 and expect that there could be some kind of rejection, particularly if it actually hits it in confluence with things like these range trends that are coming up here. So that would mean touching that level, say on Friday the 17th, and then I guess markets aren't open over the weekend, but you could see some Tesla FUD or whatever over the weekend, and then it could open up, lower down, or however markets choose to work. If it gets back up over that level, then that would be a daily breakout level, and then really 488 is the next break level. I don't think it's ever been higher than that. Correct me if I'm wrong. No. So it may try to retest the highs or head back up to the trend, or at least head back up to the break. It's an absolute bird's nest of resistance up there. So, which is kind of what you'd expect at highs. Yeah, so from a daily perspective, I guess look to see that it reopens back up inside the top range, then look to see that it gets over the top of the interior trend, and then past that, probably expect some form of retracement or rejection. Certainly a very key area to be looking to take some profits if you're heavily in profits, and if you are only trading this. Totally understandable if you're just a lifetime holder that just wants to hold it. Whatever the rejection is off that, it probably just find some support and then go back up, unless it really starts to close under these levels and just keeps on traveling down. I still think the monthly and weekly levels, yeah, the monthly and weekly levels are still underneath resistance. So I don't know whether people day trade this, weekly trade this, monthly trade this, or just hold it and are looking for hopium that it goes to $1,000 or whatever. But it's yeah, it doesn't look too bad. It really had the opportunity yesterday of either just turning to custard, but the ginormous market dump was very much just crypto focused, and sure enough, as expected, the recovery tweet came out at the right time to recover it before the normal markets opened. So yeah, it's pretty. Oh boy, it is what it is, right? Big sigh. Okay, and I know I've had requests to cover ETH as well. It takes quite a long time to do these videos, and while I'm doing these videos, I can't trade, so just bear with me. I'll try to fit as much in as I can, and yeah, and I'll try to expand a bit more on Tesla. I may do it in a separate video, or I may just add some extra time frames. Yep, got to balance somehow, making money and doing free stuff, because one of those is definitely important from one perspective, and the other one's equally rewarding. But yeah, like, subscribe, and we'll catch you again on the next one. And yeah, take care. Cheers. Bye.